Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and typically it would be Mr. Michael Becker, the Governor, Mayor of Beckerville, USA, but we are pleased to have the professor in, Mr. James Eng. James, how are you?
Thanks for having me, Paul. Great.
So James, we call him the professor because if he wasn't doing commercial real estate lending, he would be a history teacher at the University of Texas and telling people what the history is about what's going on for the United States. And so a lot of parallels when it comes into multifamily that James does a great job on his YouTube channel. And let's give a little shout out to your YouTube channel. James, if people want to kind of understand, learn on some of the history lessons and what some of the forward thinking is that you provide to them, on a monthly basis, how do people get a hold of and watch some of your fantastic videos?
YouTube, type in James Eng or multifamily financing, and then you'll go right there. I'm not sure about history, but maybe economics or finance would probably fit better. One of my favorite professors back at UT was a guy. He would just open the newspaper and he'd read the headline and then tie that back to what the hell he's teaching us that day. And I thought he was the best guy, because I think the concepts that you can learn from reading the newspaper and what's going on in the market is changing every day. So that was one of my favorite classes.
Let's hold that thought. And we're going to come back to that in a second here. But James and the Old Capital crew want you to come to the Old Capital Conference, which is our annual conference. It's going to happen in Dallas on September the 15th. And James does a great job with his team at Old Capital about putting that together. James, tell us a little bit of some of the highlights that people should understand and come to about this annual conference.
Yeah, I think one of the more unique, so it's September 14th, which is a Wednesday. It starts out about 5:00 with a happy hour just to get people sort of warmed up here a little bit. And then Thursday is a full day event, September 15th here in Dallas, over in Arlington at Texas Live. And every year we have 500-600 people. And majority of people who come in are general partners, limited partners, property managers, lenders, listing brokers. So people throughout the entire sort of spectrum of multifamily. And really these guys are focused on Dallas, Fort Worth, Austin, San Antonio, Houston. And the big thing that we like to promote is really just the networking of people. And a lot of times these events, you never know what's going to happen. You never know who you're going to meet. You never know who you're going to bump into in the hallway. A lot of these events, we have people find new partners. They find new limited partners, new general partners. They might find a new property management company. You just never know who you're going to meet and what you're going to learn throughout the couple of days here in Dallas. And so the first day is really a happy hour. So that's pretty straightforward. We're going to have it over in Addison. So come grab a couple of drinks, have some appetizers. And then the location we picked essentially is in the middle. I think Addison has more restaurants than any other city in the world, probably, it seems like, on the street that we have it on. So come grab a couple drinks with us sort of from 5 to 7, 7:30, and then go grab 10, 15 of your new best friends and go have dinner Wednesday night. And then on Thursday, it's a full day event over at Texas Live. So Texas Live is right next to the ballpark over in Arlington. And we rented the whole venue. And so it's got all these different restaurants. It's got all these different, one of the biggest screens, not as big as the AT&T Stadium screen, but one of the biggest screens that we'll have the speakers on in terms of, and we'll probably have 500-600 people at that day's event. And we'll go through, we'll have a couple panels. We'll have listing brokers, lenders, property managers, general partners talk about what they're seeing in today's market. And then also we'll bring in some economists that are a little bit more attuned than even us. So people from Pensford, JP's coming in, and then we're going to have a couple other speakers in terms of what's going on, not only with interest rates, but then the general market as well.
Tell us a little bit about some of the fun activities, people that have hosted and spoke at the conference before.
Yeah, I mean, we've had it at a couple of different venues. We had it at AT&T Stadium, we had it at Globe Life Field, we had it at House of Blues, and brought in speakers. We had Rob O'Neill come in, we had Lou Holtz come in. So in terms of keynote speakers, we're going to find some of the best speakers to come in and really talk about whether it's business or life or multifamily, find the best speakers out there and bring them to you live. And so the venue that we're having it at is called Texas Live. And we sort of morphed that into Old Capitol Live. And the way that we're going to set up the day on Thursday really is Paul and I as sort of your Jimmy Fallon and David Letterman for the day, and really set it up so that we'll have some panels, but then we'll also have maybe some parodies in there on what's going on in the market. So I think in the past couple of years, we put together some pretty good videos. So definitely be in your seat for those. So some people have gotten mad because they've missed some of those videos. And so definitely be in your seat, pay attention, and you'll have a good time on the Thursday event for the conference.
Everybody likes to come out, and we're going to have 500-600 people there. So it's great to learn about what's going on in the marketplace itself, but it's also the reason why we do it is really for the relationships, to build those relationships. When you build those relationships, that is potential income down the road for you on putting these transactions together. And so these transactions need people's equity. So a lot of people that come to these conferences, they don't want to be operators. They just want to be investors. And so that's what we could try to cater to, is have come on over, get kind of a general understanding about what's going on, making sure that you meet other, say, general partners that are operators of these properties, and bring your checkbook if you want to start to thinking about investing. So again, people only do business with people that they know, like, and trust. And we're trying to have you meet people that that may not be in your database, but you want them in your database, because that's what they do, is they invest in transactions. So look forward to having you over there. Any other final words on the conference itself before we open up the paper, as James said, and we talk about some additional topics that are on the top of our heads?
Yeah, I mean, so September 14th and 15th, you can go to oldcapitalconference.com and register there. And I think one of the things that's happening in today's market, which we'll talk about a little bit more, is a lot of these deals aren't even coming on the market. And so it's becoming a little bit more of an off-market game right now in terms of acquisitions. In order to get into sort of that deal flow, you can't just sit sort of behind your computer and wait for the email with the listing broker blasting it out to 10,000 people and then going on a tour and putting in a bid with 20 other people. It's a little different right now. Sellers are wanting to get pricing, but then they want certainty of execution on, if I had this deal up for 90 days with this buyer, is this guy going to close? Getting to know some of these listing brokers, we'll probably have 40, 50 listing brokers throughout Texas come to the conference, and all of them, most of them are on vacation this summer, but starting in September, they will definitely be back and trying to sort of get all those deals done by the end of the year. So definitely go on oldcapitalconference.com, register, and we'll see you.
MC, James, and myself, and the Old Capital team, but some of your partners too, that maybe you've done business with in the past, rekindle those relationships right now, because in September, I think we're going to be off to the races, maybe September, October. So we're excited about that. So James, let's open up the newspaper as your professor at UT would do, and let's talk about some general topics that we're seeing some things come together with or not come together. I think we had a podcast back about 2 months ago before the summer. And I think it was, should we take the summer off? And so some of us have taken vacations, and you came back, you went on a vacation and you saw some bears. Tell us a little bit about that.
Yeah. So we were up in the Smoky Mountains National Park last week. And I guess there's about 1,500 bears in that park, and they're protected. So they don't really have any natural enemies. So they're just sort of walking around. So, we pulled up to our little Airbnb, unloaded into the car, and within 5 minutes, a bear came down and just started walking around the car. And believe it or not, they jumped up on their hind legs and they opened the passenger door, or tried to open the passenger door. And then they went around to the other side, to the driver's side, and tried to open that door. And so we got two muddy footprints, bear claws on our car within the first 5 minutes of being there. And so, I mean, definitely a lot of people, whether it's the stock market, whether it's the crypto market, a lot of people are feeling sort of a bear market right now. And, I guess the analogy is that, yes, it is dangerous, but if you do, let's say, feed the bears or agitate the bears, then it can be dangerous. But most people just sort of give them their space, and you're supposed to stay 50 feet away and not feed the bears. So don't feed the bears right now.
Don't feed the bears. But I guess when you're up in the Smoky Mountains, you didn't see any bulls up in the Smoky Mountain,
No
bulls.
No.
Are the bulls completely gone in using that same analogy that you're seeing a bunch of bears versus seeing a bunch of bulls?
Yeah. I mean, I think right now, most of the people who are out there buying are trying to be opportunistic, trying to put these deals together. There's definitely deals still being done right now, but I think it's just in a different fashion, right? So it's a little bit harder on the bridge side right now, for sure. We're coming out, and the Fed, the latest inflation reading was, close to 9%. And so the Fed is, they're, when all you have is the hammer, they're just going to keep hammering these interest rates, especially on the front end of the curve. And so we're seeing, SOFR go from 150, maybe go to 2.5, 225 here at the end of July. And so that's going to put a lot of pressure on these bridge loans, and it's also going to put pressure just on, debt service coverage, right? So a lot of these loans, even on IO, need a little bit of help in terms of an interest reserve, just to catch up with the rents and catch up with what people are paying for some of these properties. And so it has been a little bit difficult, but what we're seeing now is sort of a little bit of a reset on pricing. And with that reset in pricing, Fannie and Freddie, the 10-year treasury has been pretty calm. Actually, it's sat around 2.8 to 3%. And so that's allowed people to, get fixed rate debt at, let's say, 4.75 to 5 on Fannie and Freddie. And so that allows you to get maybe 65% leverage. And so for people who are maybe selling some of these deals and wanting to get into multifamily or 1031 their money into other deals, they're still buying in today's market. But instead of using maybe a 75, 80% bridge loan, they're using a 60% Fannie Freddie loan right now.
You and the team at Old Capital do so much business. Can you walk me through maybe one or two successes that you've had in the last week or two, and maybe one not so success, if you have any of those books, and kind of just give us a little background, keeping names and properties out of the picture, but to protect the innocent, but just give people kind of in your head of what the success was or the failure.
Yeah. I mean, the past 2 to 3 months, if you've been a buyer under contract, it hasn't been easy, right? So you got under contract, and SOFR might have been 25 basis points. And now it's moved up to 2% already while you've been under contract. And then, the 10-year treasury spiked up to close to 3.5, and then it's calmed down a little bit. And so a lot of these deals that went under contract, they pretty much had some sort of loan cut or a increase in spread on these bridge loans. And that has forced them to sort of go back to sellers. And even with, $500,000 or $1 million hard, they're getting price reductions from sellers. And so it sort of has allowed them to keep their equity checks the same. They're having to underwrite a little bit higher interest rate, but these deals are still getting done. So just in the last, I would say 2 weeks, we've closed 3 or 4 bridge loans on deals, and everybody's a little battle scarred a little bit because, in the past, buyers have come in, they put down 500,000 day one. The lender said they were going to give them 10 million in loan amount, and they gave them 10 million, and they raised the equity in 2 days and closed in 45 days. So it's pretty seamless, but the past 2 months, it's been a lot more choppy. So I think a lot of these guys are a little bit deal fatigued, but they made it through. And so everybody is sort of happy that they made it through. And, as long as you're buying the right property, I can't remember where I saw this, but there was a realtor up in, maybe it was Tennessee. And his quote was, marry the house, but date the rate. And so this was on the single family side, because single family financing pricing or single family interest rates have gone up as well, right? So you were at 3%, now you're at 5.5%. And his thought was, look, you can come in, if you find the house that you want to buy, let's buy the house, but then get the interest rate that you are right now, but date that rate, right? So you might be floating for a little bit, but as soon as you can, refinance that rate or sell that property. So let me try to say that again. Marry the house, date the rate is
I got to write that down, Professor, because that's a good one. I got to use that. Marry the house, but date the rate.
Yeah.
Any success, again, stories? I mean, I know you talked about anything specifically that buyers have had to do. I mean, are they retrading these deals? Is there anything pushback to the lenders on what needs to be done? Tell us a little bit about some of the successes that way.
Yeah. I mean, I think, I'm not saying it's dollar for dollar, but let's say you had a $20 million loan and you got a $2 million cut in loan proceeds. So about 10% off of your loan. And the lender can have various reasons. It could be the appraisal. It could be sort of the rent growth that you expected. It could be the exit debt yield that you have. It could be a number of things that the lender can come back and sort of retrade on. And so on this one particular deal, essentially the loan amount was reduced by over $2 million. And they went back to the seller and just sort of laid out all the costs of the interest rate cap. They laid out the cost of the higher interest payments, and they were able to get a reduction pretty much dollar for dollar on the purchase price. And so that loan just closed this week, and the buyer was happy, seller was still happy. If they took that deal back out to market, it would be definitely more challenging to get done. And so I think that's sort of the offset is, yeah, you can close on this deal, or you can take this guy's earnest money, but take the deal back out to market. And I'm just not sure you get the same price and the same attention and the same number of buyers that you would, in February or March of this year.
I think that goes to the philosophy of the bird in the hand theory type of stuff is, you already know the buyer, and if they've raised the equity, just execute the trade. If you have equity that you've owned this property for a while and you're just sitting on it, you think that you're rich when you initially signed that PSA, thinking as the seller that I'm going to make the $20 million and I'm going to get, the investors are going to be having a party for me. But, a $2 million reduction, if you're sitting on, all these profits, hopefully that you bought this property 3 or 4 years ago or 2.5 years ago and values have gone up, you're still rich, but you're just maybe a little less rich than you were when you originally signed the contract. And you're still going to look like a hero. Talk a little bit about the philosophy right now, James, on the listing broker side, because these guys have been kings for the last 10 years, 9 years, 8 years. I mean, they've been the king makers and trying to make you as the buyer beg them to get an opportunity to do business and close on a loan. Roles have reversed a little bit, haven't they, James?
Yeah, I mean, in the past, it would have been, the listing broker sends it out via email to 10,000 people. And then there's, 50 tours and 20 bids. And then it's best and final, and then best and final, and then best and final, the best and final. And so pretty much as a buyer, you had to give the seller / listing broker pretty much everything. And so now that's changed a little bit. And now some deals, they have a price on it. If you can hit that price, then it's your deal. So let's say there's a deal for 15 million here in DFW. And, a lot of buyers are saying, well, when I underwrite the deal with today's interest rates, I'm getting the 13 million on the purchase price. James, should I submit that offer? And I'm like, absolutely. Let's submit the offer and see how bad does this seller want to sell, right? If the seller's sitting on a Fannie Mae loan and they got 8 more years on the loan, probably don't want to sell that bad, right? But if they got a bridge loan and it's coming due in the next 6 months and, their rate is going to 7%, then that guy probably has a little bit more pressure to sell, right? So you got to figure out the motivation for some of these sellers out there and then make the deal work going in, right? So, get a debt quote from us, figure out, what it sizes to, on Fannie, Freddie, or even a recourse bank loan. So we've been doing a lot more recourse bank loans on these deals, probably under 10, 15 million, and figure out what you can actually pay for these deals and underwrite the interest rate appropriately. If deals could get done at 17%, then deals can get done at 5%. So you're just having to reprice some of these deals, and don't be afraid to sort of hold your ground as a buyer in today's market.
So are you telling me that there's a chance? What is that from Dumb and Dumber? That when he wants to date somebody and she kept on saying, no, no, no. And then he goes, well, maybe there's a chance. So now today, if you are a limited partner or if you're a buyer, there is a chance for you to buy a property that maybe you couldn't get to or you were elbowed out. Now these listing agents want to see your opportunity in writing. And, just what I've heard on from some of these groups that, they used to work on 20 deals at one time. They had so many buyers, they were just, selling these deals left and right. They've gone from 20 deals down to 3, 4 deals. And that is just a large chunk of business that has just kind of gone away. Are you seeing that too a little bit, James, about, the amount of volume has come down?
Yeah. I mean, I think if I go back to my inbox, maybe in February, every hour I was getting a new listing, it seemed like, and from brokers all throughout Texas, all throughout the nation, every hour it would be like, ding, 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 new listing, new listing, new listing, new listing. Now you might see 1 or 2 new listings, a week, it seems like. And, Dallas Fort Worth has been one of the most liquid markets. And so I think, some sellers, they don't want to seem desperate. And so they don't want to list the deal. So brokers are just they've got these deals. They might have a listing agreement, they might not, but the seller's giving them a price. Hey, go out, get me 15 million. If you can bring me a buyer at 15 million, I'll sell this deal. And so it's become a little bit more of an off market game right now, I would say in the summer. And then maybe, around Labor Day, some of these deals are going to get kicked back off if some of these guys want to execute, and hopefully we see a little bit stabilization in the interest rates. So the thing that has been stable is really 10-year treasury. The thing that is not stable is SOFR in the front end of the curve. And so that's the part that is getting people a little bit nervous right now, just because we've seen not only SOFR go up. So on these floating rate deals, it used to be 325 over SOFR. Then it went to 350, then it 375. Now everything's pretty much 4 over SOFR. And on some of these smaller deals, you're getting quotes at 5, 5.5 over SOFR. And if SOFR goes to 3.5, 4, then you're going to be north of 8, 9%. And so in order to make these deals work, you're going to have to start buying at a higher cap rate.
Yeah, certainly true about buying at a possible higher cap rate in the future. I mean, it's not the future's now. I mean, but how critical is it to make sure you have the debt already aligned? Because again, the listing agents still think that we're back 6 months ago. They should be putting hard money into the deal, but the debt is just not that easy. And so talk a little bit more about making sure your debt is lined up before you go with hard money.
Yeah. So on a lot of these transactions, from, I would say, LOI being awarded to PSA is when we're getting engaged, or even before the LOI. And really, whether it's a recourse bank lender or Fannie or Freddie, we're taking these deals in early to these lenders to make sure that, everything checks the box. The guarantor checks the box, the property checks the box, all those things work for the lender. And we have a pretty firm term sheet to go with on these deals. And then that sort of gives us the thumbs up to the listing broker, to the seller, that this buyer's for real, right? So you as a seller, you don't want someone to tie up your deal with no hard money, financing contingency, and then they tie up the deal for 120 days. You just wasted, your staff's time, your time, everybody's time. So on the front end of these deals, we're getting the debt lined up. The earnest money, I would say, instead of $500,000 on a $10 million deal, it's probably $100,000, right? So it's back down to probably closer to that 1% number versus 5, 6, 10% of the purchase price on some of these deals in terms of hard money. So I think there is still some hard money in these deals, but it's a lot lower.
Talking about fixed rates and what's going on these days. I just locked a loan today, a little bit under $10 million, 4.905 loan term for 10 years, 120 months, amortization in interest only for 120 months. So it's a 10-year term, 10-year interest only. So a lot of fun these days, especially because your leverage is so far down that you have a lot more flexibility that what you can do on these loans.
Right. And I mean, a lot of people are, I mean, they still are allergic to yield maintenance. I know Mike is allergic to yield maintenance, but making sure you have, if you do take a floating rate loan, obviously you're buying the interest rate cap that a lot of lenders are requiring, but then also having money for the escrow on a monthly basis, you have to build that into your model. And then if you do a fixed rate, a lot of people are going with either step down prepay or maybe a 10-7 yield maintenance and paying a little bit more in the rate in order to lessen that prepayment penalty pain that you could have sort of on the back end of these deals.
All right, now let's use your crystal ball, James. What do you think about what's going to go on in the future coming into the fall? Is it time to get out of vacation in the fall and let's start doing some deals?
I think as a buyer, I think you have to still be underwriting these deals and making offers, because what brokers are doing are, if you are out on these properties, if you're touring properties, if you're making offers, they're just going to keep bringing you deals, right? If you tell them, hey, I'm pencils down and I'm not going to buy anything until, September or October, they're not going to send you anything, right? So I would still be underwriting deals, underwrite your interest rate conservatively and make sure that, number one, you have your debt lined up. Number two, you've got the equity behind you, right? And so I think showing, whether it's bank statements of the KPs or something, to show them that you can raise this equity, because what we're seeing across multiple general partnership groups is just that the equity raise is going slower, right? And so, whether it's tech guys who thought they were going to IPO for $1 billion, not being able to do that, or, guys who just they're looking at their 401k balance and it's down 20% from the beginning of the year, they just don't feel as rich. And so they're just a little bit less hesitant to write that $100,000 check into your deal right now. And so just making sure that, you sort of build that in, and instead of sending it to 100 people, you probably need to send it to 200 people to make sure that you raise the equity for your deal. So still, as a buyer, I'm still underwriting deals. I'm still making sure that it works with the leverage that Fannie and Freddie maybe can give right now, or maybe a recourse bank lender can give. And then as a seller, I would just be cognizant of sort of where your basis is and, what the plan is for this property. And so if you've owned it for 3 to 5 years already and you hit your numbers now, it's probably still okay to go and sort of soft market the deal and maybe bring it out in September, unless you really think and believe in the deal and it's time to refinance the deal and maybe hold it for another 3 to 5 years. I know some owners pretty much have looked at their portfolio and said, look, if it can make it through COVID, if it can make it through all these things, then I'm just going to hold on to this property and I'll just recap it or refinance the loan and just hold this deal, right? It's hard to buy a deal right now. I know this deal inside and out. And a lot of rent rolls right now are still 15, 20% loss to lease on these deals. And you've done it on maybe 10, 15% of your units, bumped the rents by $250. And now you just keep doing that, right? And so a lot of owners are just saying, look, I'm recapping some of my deals. You can stay in as equity or you can roll it out to something else. But a lot of general partners who have made it through sort of the hurricane of COVID, they're just saying, look, I'm just going to hold on to this deal.
All right, let's wrap this up. One more time about the Old Capital Conference. Again, if people wanted to get tickets, because it does cost to come to Texas and be part of that and network and get to know some of your friends that are going to help you become successful. Again, James, how do people get to the Old Capital Conference?
Yeah, so go to oldcapitalconference.com. You can see all the pictures and videos and all the things we've done in the last couple of years. I think this is our 6th year that we've done it. And then also you can register there. And then also the dates again are September 14th and 15th. So put that on your calendar. The entire Dallas multifamily market is shut down for that day. So
it certainly is, James. There's a big traffic jam coming to Arlington, Texas, coming on September 14th and 15th for the Old Capital Conference. Get your tickets early. We have a lot of people that have already signed up. We're expecting about 500 to 600 people there of your newest best friends. So make sure you get your tickets at oldcapitalconference.com. And now the professor, thanks very much for joining us. We appreciate that. Again, I'm Paul Peebles, and have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.